Hello, everyone. How are all my Trading Warrior brothers and sisters doing today? Thank you very much for the birthday wishes. Appreciate it. Good morning, Alexander. Thank you. Simon, thanks, buddy. Hugo, thank you. Nuno, thanks. It's better than the alternative. Good morning, Paul. Shalom, Amira. How's everyone doing today? Brock, thank you, buddy. Mustafa, thank you. Arena, Rick, Paul, all you guys, Sinatra, Yark, hey, Scott, Ziggy. Oh, thank you, everyone. No one's going to ask me my age, are they? Okay. All right. Well, if you want to know my age, it's the same as WTI. I'm WTI today. And looking to pull a Benjamin Button. Does everyone know that movie? So my age will go with crude. Looking to become 40 years old a few months down the line. Taking a quick look at crude, it's really been a tough trade this week, top picking it, but there's still a chance that it may not make a new high. Thank you, Paul. You have to start trading back under 65. So we'll see if this is a distribution or not, probably in the next few hours. Okay. Dollar had a decent day yesterday. I'm not declaring it a bottom. Canada had a decent day, giving a lot of it back. Looked like it broke out. It's testing 2080. So dollar lower. I think there's, I wasn't declaring this a bottom. And we'll see on Canada. Here's your really important area. Well, let me show it here, the wedge line. So the wedge line that it broke out of, it could come back down and perhaps test it here at 2060 without making new lows. But, to me, it looks like we probably have the 3 drive back on the table, right? Although it's pretty stretched. We'll see. S&P is coming back. Gold and silver, that we didn't quite get to the 1920 level. Maybe we still have that left in it. And silver continues to be weak. I thought we'd get up to 78.6. Maybe it still happens if gold goes in over 1920. I mean, that's a $25 move, but silver really dogging it under 27 and a half, 27 next. But right now, this looks like a failing rally. I may have spoken too soon about looking for a breakdown in 10-year yield because now it's looking like just a pullback, and we'll see what happens here back at 162. One of the reasons that I didn't short the yen, here's a pretty good lesson on correlations that, if you had seen this, you would have thought the yen would have come off, right? And the yen did exactly the opposite. So correlations at times do disconnect. Oh, thank you, Sensi. And I don't want to take up any more time because we're fortunate enough to have Grega with us today. So let's bring in, Grega after Blake here. Blake talks for a few minutes and,
Hey,
you
happy
guys.
birthday.
Hey,
Happy birthday
thanks,
to you,
man.
Dale.
Thank you, Blake.
So what are you doing today on your big birthday?
Well, I figured I'd, maybe go out tonight.
Yeah, you're gonna treat yourself to some ice cream or something.
Yeah, maybe, maybe even some alcohol.
Hey,
I mean, what
I
the
would
hell?
celebrate my birthday every day if that was the case. You know,
Thanks, Blake.
hey, happy birthday to you,
Yeah.
Dale. But we you know, uh, I mean, I want to wish you a happy birthday. I know everybody here, all the whole team would like to, but we have a little treat for you. So here you go.
Wow. Oh, he's doing it.
Birthday, my friend Dale.
Uh,
Happy birthday to
how nice. Thank you. Thank you, Leandro. You should have been a rock star, I'm telling you. He is a rock star. That guy can play guitar and sing and looks like a movie star. Kind
Happy
of
birthday
wasted.
to you, Dale.
Happy birthday,
Thank,
From
coach.
yep.
thanks, Stell. Thank you, guys. That's, you better take over, Blake, because you know how sappy I am. I have to go get a hanky now.
Well, Leandro, that was I must say that was beautiful. He
Yeah.
is quite a musician, and that was perfect to
Yeah.
celebrate your birthday. So,
Thank you,
um,
Blake.
yeah,
Cool.
well, you know, it's hey, you made this is your milestone, baby. Go out and get drunk tonight. That's what I
All
have to
right.
say. All
All
right.
right.
You know, I know Greg is. I don't know if he's here yet. Let's see if he's made it here. I know he's coming in.
Not yet, not yet.
Not yet. Okay. So really quick, I'm going to cover just a couple of things before Greg comes in. I know he's coming in 10 minutes after the hour. You know, it's been a pretty quiet market. The sterling, you know, was racing up towards its highs. Some comments from the Bank of England. It looks like that we just had a $6 trillion budget proposal from Biden that spiked up futures just a moment ago. Uh, you know, the dollar not really doing a whole lot as a result. The dollar yen's kind of spiking up. I guess all the yen pairs might be moving. One of the big movers right now is the Kiwi Yen. You know, we've been broken out of this
Wow.
bullish, bullish wedge. Should be targeting like 80.17. This is the 127% extension. That's the next stop for that pair. It's really one of the things that have been moving. And also, like you take the euro yen, has been in breakout territory. You know, unless we get back below 132.50, no reason to be bearish there, despite the divergent relative strength. The other thing that's been moving that I needed to point out is the U.S. dollar CNH continues to break down. Yesterday we were watching it just in case we got a false breakdown, but that didn't happen. That we just continued lower. Yesterday, at the end of the day, we closed at our lows. We continue to break down here. You know, I'd like to see where we close by the end of the week because we've had some dollar flows move the market. And I think yesterday, as I was telling our folks in our chat room, I think yesterday was a little bit of a stunner to dollar bears. You know, people were pretty bearish the dollar going into yesterday. You know, one of the things that worried me about if you look at the dollar index just from 2 days ago, and let me. This is yesterday, obviously the green bar from yesterday, but the previous day, you might have. I mean, unless you were watching it really closely, I know we noted it, you know, with Forex analytics. If you go look at the dollar index here and read from 2 days ago, strong pivot off support zone for the dollar index, but a move above the 90.25 levels needed for bulls to take charge near term. RSI may be breaking higher out of a consolidation. Oh, that was yesterday. I'm sorry. The day before. A move below the 88% retracement last week's lows, only to close back above the 89.66 level, may have put in a false breakdown. However, the dollar index will need to take the downside pressure off by getting back above this trend line. Now, yesterday, because of the false breakdown from 2 days ago, yesterday we had this strong move higher. Obviously, the trend line's holding us here, so you can't get like bullish just yet with the dollar. But I think that dollar move yesterday really stunned a lot of traders, so a lot of people were probably thinking, oh, hey, we're going to, new 2021 lows. And then that end of month, some of the end of month, end of quarter flows have really come in and dominated. So I know we have some data coming out here in about 20 minutes. We have GDP data. We have some durable goods orders, which inflation folks are going to be watching. We got weekly unemployment claims, which, with jobs report next week, people are going to be watching kind of closely. So maybe the data end of month, end of quarter flows might be more dominant today in North American trade. So I know it's been kind of quiet in European trade, but that doesn't mean that we're going to stay in a 40 pip trading range, which we've been in the euro dollar all day long or all Europe long. That doesn't mean we're going to stay that way. So just, I think we need to be on our toes today. Grega, is he here? Let me see. Do you see him, guys? Steve Stelios?
No,
you do not. Okay. Well, we're waiting for Grega. He should be here any moment. He just checked in with us, so he is. I don't know where he's at. He should be here any moment. But Stelios, Steve, I don't know if you guys are here. Do you have anything you'd like to say to Dale because it's his birthday?
I'd like to say happy birthday, send him a big kiss. I'm happy. He knows it.
Guys are going to go like watering
It's been a 4-year bromance, and Steve's very jealous of it. So that's why he didn't wish me happy birthday.
I have to say to Leandro, I'm turning 50 in August, so he has to do something to top that. Okay.
Yeah.
Amir said, I think Blake is a month off with quarter end comments. Maybe it's just month end. Is it just month end? Wait.
It's month end.
It's not quarter end.
No, quarter is.
No, it is. No, yeah, you're right. We got to be at end of June. Well, it's quarter end. Thank you, Amir. You're right. Hey, and do you guys realize it's early in the morning here? Huh, Dale?
Yeah, and DJ, I can't do that anymore. I'd have a heart attack.
Oh, Greg is here.
Grega is here. Good. Okay. Grega is in the house. And thank you, Amir, for that. And hey, Dale, happy birthday to you.
Happy birthday, Dale. Sorry,
happy birthday, Dale.
Thank you, Steve. I thought you were worried, still upset
no, I was,
about my
I just
affair
came
with
home.
Stelios. Okay. All right. Thank you, buddy. I love
Grega,
all you guys. Last 4 years have been great hanging out with you guys every morning. It's a birthday every day.
Nice.
Feelings
All
are
right.
mutual.
Well, hey, happy birthday, Dale. Hope you have a great day. We're going to pass it over to Grega. I know he has some things to share with the traders here at that are listening in for the FACE webinar. So, Grega, welcome back, and Dale, have a great birthday.
Thank you, Blake, and welcome, Wizard of Waves.
Hey, Wizard. How are you, Dale?
Good, Greg. Looking
So
forward
what are
to
your plans for today?
To pay attention to what you're saying today, so I have a chance to succeed in the markets.
That's not true. You just said just earlier you're getting drunk
alcohol.
tonight.
Yeah.
Oh,
yeah.
Okay.
All right.
Grega, you can take the charts.
Yeah. Okay. So here we are. So, I mean, a lot of dollar pairs are consolidating, and looks like that we may not see any kind of a strong breakout yet, maybe next week. So I just think that we should be aware of more consolidations, especially when I'm looking at some of major currencies versus the US dollar. Firstly, I will look at the euro dollar and still think that there is a real chance that this market will actually continue higher here into wave 5. to retest these 2018 levels. Keep in mind that this high, also from start of January, is still in play. So in my opinion, this is going to be cleared out before we may potentially see some kind of a deeper retracement. Now, looking at the short-term charts here, we are seeing a reversal down from resistance that I've been highlighting for our clients for the last week or so. Actually, I've been looking for this to be limited upside for a wave B, and I'm expecting potential weakness into wave C of a flat formation, especially if this trend line will be taken out. Also, I had another wave count or interpretation where I could label this rally from start of May as a wedge pattern. It could be even as an ending diagonal. So both interpretations actually suggest that there is a strong resistance on the euro dollar up here. So I really would not be surprised if we see a more weakness here, and then maybe next very nice bounce could occur from this 1.2 level. It's very nice potential support that was firstly a support here in February, then we have seen a resistance after a breakdown in March. Then again, we switched back to the uptrend here in April and retested the first time as a support at the start of May. So something similar maybe could be playing out in upcoming weeks. So that would probably be the perfect scenario for this trend to resume higher. Also, if we look at Aussie dollar is also in the middle of consolidation. We covered this with Steve, I believe last week. We said that Aussie is probably consolidating here, looking to be a triangle, still in the middle of a process. I mean, we are tracking wave C that could actually retest some of the swing lows from start of May. So generally speaking, it's consolidation. It's not finished yet. So we really have to be aware of more choppy price action for the next few weeks. And then maybe we see a break higher at the start of summer. But overall, Aussie is bullish, and I will be looking for continuation higher here back to these 2018 levels that hasn't been reached yet. Also, we have to keep in mind that dollar Chinese yuan here is now trying to break this very important trend line support after an ABC rally. So I've been bearish on this one for a while, and looks like that there is plenty of room for more weakness here, which actually supports the view for bullish.
I think it will, Gregor. I think it will.
You think it will what?
It will break down. I think.
Yeah, I mean, we could experience some kind of a pullbacks, but general story here that I'm looking at is more weakness here, which is clearly a downtrend. Means that sooner or later Aussie dollar will be maybe pulled to the upside, which is lagging compared to this pair at the moment. So that's why I think that supports on Aussie could be even more interesting after that consolidation will be completed there as a triangle potentially. Now, if we take a look also on dollar CAD, now dollar CAD is in a strong downtrend here, still looking at incomplete impulse, but then just have to be aware of potential rallies here into fourth wave. But for now, this wave 5 of 3 is approaching some support line, but there appears to be room for more weakness in the short term. I'm looking at this intraday sequence within wave 5. As you know, it's a multi-wave, should be made by 5 waves. And despite some support here, we are just consolidating. Cannot see any real strength here, definitely not impulsive. So I'm thinking about wave 4, which could maybe be as a triangle. I even went to this 1 hour time frame charts here earlier, looking for waves A, B, C, maybe more sideways price action. Then if not tomorrow, maybe early next week, we could see a retest of the lows. Let's not forget that crude oil is still in uptrend. Actually, we have seen a very sharp drop last week, but then immediately reversed and erased all of those losses. So it looks like that bulls are clearly in play here and going to stay bullish for 68 in the near term. Also, it appears like a very nice consolidation here on the way up. So definitely I'm looking for retest of this May highs, and this actually supports the idea for more weakness.
Grega, we're also currently testing trendline resistance. If you take the peak of wave 3.
Yeah.
Yes, and you pass it from the previous high before we had that little sell-off. Yes.
Yeah. I would be looking, if we fail at this resistance line, this trend line, then I would be looking for this wave count, for a triangle here.
Yeah,
that's, you have it on the right.
That's what I have on my chart, a triangle.
Yes, but in both cases, even if it's a triangle or this one, this is your invalidation level, the 6150. So it doesn't really make any difference based on this interpretation, because this, for me, appears to be like an impulse, especially when I'm looking here at the intraday chart. You can clearly see 5 waves up from that May 21st low. So I would not be surprised if we really see that trend line taken out very soon, actually. If not this week, then I would say next week. But if we see any surprise and let's say a drop towards 63, then of course triangle is also a very valid scenario. But still, sooner or later should take us back to these March highs. What I have left, let's take a look also on New Zealand dollar. New Zealand dollar has seen a very nice bounce this week, and we are unfortunately still just slowing down here for at the neckline. So it's not a decisive break higher yet. It would be a different story if we, let's say, rally today and see a close after the US around 73.40, then I would call it as a breakout and would look immediately higher. However, there is a chance that we will see this happening in the next few days. So generally speaking, I still see this as a completed wave 4 here on a daily time frame. So it's just a question of time when we will see a progression to the upside. But I think that this that New Zealand can be much stronger in June. Also, I believe we have holidays in the US.
That's correct.
Weekend? Yeah.
Yes. Memorial Day weekend.
Yeah. So maybe this breakout will have to wait till next week, but then I just would really not be surprised if we can see more strength. I mean, the head and shoulders pattern looks very nice here, and it fits perfectly with the Elliott waves, with the Elliott wave structure. Also,
Grega, now that we've had a little bit more price action in Bitcoin, for example, are we in a wave 4 of C or something like that? That would be my main assumption at the moment.
On Bitcoin, okay, I will take a look. I will just a moment to look at gold here.
Great tip on gold, Grega. Really nice.
Yeah, thank you. I mean, it's still in play.
I know,
at least for now.
Yeah.
I mean, gold has seen a very nice recovery here, and I've been looking. We're looking higher since we reversed from this trend line support here. We covered this one with Steve few times in the past webinars. So after we have seen this breakout, I think that there is room for more gains. Of course, there will always be pullbacks on the way up, and I'm expecting something similar here in the near term, something like we have seen here in the past. Nothing to worry about if we see any dip towards 1850. I just think that this could, lower we go, much stronger can be the support. Also, if we look at silver, this one could be even more attractive. If you look at the 4-hour chart here, we are currently testing this trend line support. So these lower prices here for a wave C could be equal to fourth wave pullback on gold. So the support is around 2670. The next one is at 2560. Overall, I just think that this could be a very nice opportunity here on the way up, as long as we are holding these March levels. So I think that metals could have actually a very strong summer here. if I'm correct with the time. With the
Did
time
you just say
prediction.
very strong decade? Did I hear right?
Summer.
Decade, yeah. You Stelios want a strong decade. I know that.
Not only him.
Yeah, but he will sell his house. He said at least when silver was around 10 or something.
If it got 10, yeah, I meant it. I mean it. Anyway.
Steve did that with Bitcoin. He saw a tweet by Pomp, and
Oh yeah.
I saw that, Steve. You mortgaged your house, you're all in
Absolutely,
on Bitcoin now.
absolutely. Once I found out that Mayweather is going to speak at the cryptocurrency convention, I was like, oh my God. I mean,
What a signal.
What a
Huh?
signal. Yes. I mean,
Okay, so you asked for
Bitcoin.
Bitcoin.
My rough assumption is wave 4 of C.
Yeah, or maybe even wave 4 of A.
That's even better.
Yeah, that's even more scary.
Yeah.
So I've been looking for Bitcoin to turn here into a bearish sequence. We have seen a very nice drop. Actually, we've been tracking these Elliott wave patterns quite well since February. And so far, we have a very nice dip here. But if I look for this wave 4 and compare it to wave 2, well, wave 2 was quite long in time and deep. But this wave 4 is only deep and sharp. So I just think that it will take time before real consolidation will complete itself. I know that there are a lot of speculators trying to buy Bitcoin with short-term setups. So it really, market has to get rid of those speculators before real move higher could be again in the cards. So I'm afraid that we could actually see even deeper price action, if not deeper, at least more complex in time. So we could be continuing to the right. So as I said, this could even be wave 4. It could be wave 4 of C, as you said, or maybe even wave 4 of that wave A.
Mm-hmm.
Okay. So if we go to the smaller time frame charts, what is the most important here? Well, I will go to 1 hour time frame. And what you actually see is that rise from that low was made clearly by
Corrective.
3 waves.
Yeah.
So either it was completed correction or part of a complex correction. So as long as you don't see these 5 waves up from the lows, I think that you cannot say that correction is completed. Of course, there are not always perfect patterns that will unfold, but I think that higher probability of success could occur if you will have 5 waves from the lows when trying to call a bottom. But unfortunately, that's not the case here. So it could be a triangle here. And if that's a triangle, okay, if that's a triangle, then let me try to delete this to give you the full perspective. Okay, so this could easily be wave 1, 2, 3, 4, and wave 5.
Mm-hmm.
Okay, so that's something what would make a very nice and perfect textbook pattern, actually, to know in which stage of a trend or corrective phase this Bitcoin is. If we just keep going higher here and then maybe stop around 50,000 and consolidating, then maybe the whole picture here, if I go back to the daily, could actually be a very big triangle or something else. So it's a very tricky situation for now. I just don't think that it's good buying opportunity yet, unless you are looking for some kind of a long-term investments and you're ready to scale in as the price action unfolds, then there's a different story. But as a short-term trader, I just think that it's a little bit too soon to look for any buying opportunities on Bitcoin. I just think that there is a risk to see more weakness actually.
Yeah, I agree 100% with you. I don't think we're done.
And
Yeah.
Blake was looking for 20 grand to be a buyer $30,000 ago. Or 20 anyway.
Really nice.
Yeah, so it lines up with what Greg is looking for here. Nice
Yeah,
presentation,
I mean,
man.
this whole story around cryptocurrencies is, I mean, there are so many traders losing money, especially the young ones. So especially the newbies. So I just think
Guys,
that
we have numbers coming out
year
right now.
could bring even more damage to those if we'll keep moving lower, because it's not an easy buy here like someone
Durable
thinks.
goods worse. Initial jobless claims more or less as expected, 4,000.
Do we have any
Sorry,
questions?
406 versus 425. And advanced GDP not out yet. Correct, Stelio?
I actually
Yes.
think Grega muted you guys. I don't think he can hear you. Either one of you guys.
Yeah.
By the way, I know Dale's got to take over to bring in his guest, but I just want to say one last time, happy birthday, Dale.
Thank you, buddy.
Happy birthday, Dale.
Happy
All
birthday,
right.
bro.
You guys know I'm on bonus time, so appreciate it. And like I said, I really mean the last 4 years working with you guys has been, the best experience and the best team I've ever been with in my long career. So I mean it.
Feelings are mutual. Thank you, Dale.
Okay,
And
so
thank you, Grega.
is
Why
Greg still
I
here?
cannot hear anyone actually.
Yeah, he can. Huh. Send him a message, because I Grega, can you hear me? Thank you, Grega. Hello, Alex. Waiting to hear you. Where are you? Alex? There. Hi, Alex.
Dale, happy birthday. How's it going?
Oh, thanks very much. I'm out of breath blowing out all the candles on the cake. In fact, they had to use 2 cakes to get all the candles on there. So,
that's quite a lot of candles.
like a candle in the wind. Anyway, I know you've been looking forward to part 7. Wow, that's a big number. 7's like a number of completion. Really looking forward to. And I think that the last time we talked, you chose this time period, the end of May, not for my birthday, but because you saw that things might be coming together around this time frame. Am I right?
Correct. Yeah, I wanted a little bit more time just to get some confirmation, and we actually ended up getting on a lot of different asset classes. And I even entitled Part 7 "On the Precipice" as the title of this presentation.
Wow.
But first and foremost, I wanted to obviously wish you happy birthday, and also, believe it or not, this is also our 2-year anniversary, so we have that to celebrate too.
Congratulations! Yeah,
I didn't bring you any wine or flowers, but I brought you a lot of gems today. How about that?
All right. Oh, yeah. Okay. I figured enough pearls to string a necklace.
Absolutely.
All right.
But anyway, so we got a lot to cover today. A lot has happened. But at any point, if you want to interject or ask any questions on any slide, don't
I'm going to let you fly.
Absolutely.
Okay.
Perfect. So obviously, we'll do a quick recap of Part 6. Some of the things that happened and some didn't. Gold appears to be entering a similar topping plateau period like 2012, and also prior cycles before that. We'll go over that. Bitcoin, at the time, I said stochastics were going to chop for a few months, but at some point, some sort of macro top was going to form. That ended up happening. I said Dow Jones was going to hit 35,000 this year. That actually ended up happening even faster than I expected, but we got there within, I think, $10 or so just a few weeks ago. Energy would be the #1 performing sector on percentage basis. That ended up coming true. Energy equities and crude would be entering a mega bull market. There would be huge inflationary pressures across the board. And then also 30-year bond bull had ended. Yields are beginning to start to rise. And then even from Part 1, we finally started to have some sort of a global crackdown on crypto via the IRS. I was wondering when this was going to happen, but it took almost 2 years from May 19 till now. And, White House just released their recent guidance on, cracking down on cryptocurrencies for taxation purposes. And then, of course, China's starting to fill in their massive currency gap with some potential sovereign coin, and now they're starting to kind of crack down on crypto a little bit as well, both mining and trading. So you're starting to kind of see a confluence of everything start to happen. And even just last, I think a week or two ago, Federal Reserve started to release their, or to do their, initiate a research on
white paper, I think.
white paper, what they call, yeah, in order to start the process. So sure enough, that also came true from part one. Two things I did not, I thought QE6 would be the last stimulus bill. I didn't think they were going to do another $1 trillion one after that. So I couldn't have predicted that one. I was wrong on that one. So they're calling QE7 would be the infrastructure. Euro plateau, I thought would take 12 to 16 weeks top, but in reality, it was only a interim term 6-week top, which was outside of 3 standard deviations, and we'll cover what that means. And then also, DXY failed to form a hard reversal change, and a lot of that is largely due to QE7 related and continued stimulus printing. So obviously, that's starting to have an actual impact on the currency. So before we get started, we'll kind of do an overview. I added a few currencies today by request. So we'll go over those. I added CAD and JPY.
I do want to acknowledge on your last interview that you made a major switch from gold-related assets to energy-related assets.
Correct.
And energy, you know, was one of the top performing or the top performing sector in the market. And gold came back recently. So did energy still outperform miners, even though miners have had a pretty good run in the last
on a percentage basis? Yes, it did on a percentage basis. I also, I remember last time I said we'll go over, but last time I said, you know, we dropped at the time we were at in the mid 1900s.
Right.
Low 1900s, and I said we were going to drop back to the 1780s. It actually ended up going all the way down to my lower 698 target, and then we'll kind of go through the charts, obviously. Okay. But yeah, so for the most part, everything kind of panned out, other than, you know, the fact that, you know, Congress is, you know, partying like it's 1999.
Yeah, it's true.
So here's the Euro chart update from last time. Initially, we had been saying that, like the prior MACD tops from 2009 all the way to 2018, that it was going to roll over, and then the stochastics would also roll over, and then it'd form some sort of macro top. But if you see here now in these new green circles, actually, it's actually trying to base. Well, if we go back and look at when was the most analogous period to this, you have to go all the way back to 2002 and 2003, when there was a fresh breakout of the center line on MACD, and the stochastics were trying to base at the 80 and rally even higher. If we look at this period, there should have been a topping plateau where it would have stalled here and then kind of chopped sideways with a red green kind of candle pattern. But instead, we had 3 large red candles all the way back to a 13 monthly moving average, and then it rocketed higher. Well, what happened during the previous cycle that these MACD and stochastics match? Sure enough, you had 3 large red candles down to a 13 monthly moving average, and then it rocketed higher. So something tells me, when I saw that we were outside of 3 standard deviations, I knew something was wrong. The topping plateau wasn't working. So in the interim period right now, as of right now, Euro is still looking like it's in a bullish pattern. And until that changes, I'm not, you know, at a certain point, you have to watch what the market's telling you, not just be stubborn in your
not just your opinion.
Yeah, of course.
Yeah.
Right. And I'm the first to admit that. So
do you have any idea, any projections upside where it could go?
Based on what I'm seeing, and we'll cover the actual math behind it, but I'm seeing potentially a breakout of 123 would lead us to 128 on the upside on Euro. And if you look, we're also at a major confluence zone. This orange volume by price level is right around that kind of 120, 121 level. It's been a major support / resistance line for quite some time, going back, you know, 20 years. Nice. So we're kind of trying to, you know, it takes a while to break through these confluence zones because there's just a lot of supply in these zones. But as of right now, Euro is actually more closely mimicking this 2002 to 2007 period. And throughout the presentation, you'll see a lot of confluence across many different asset classes to this period. So keep that in mind, roughly 03 to 07. This is an important period. So after the Euro, we're going to discuss the pound. Pound actually broke out of its long-term bear channel as well. its stochastic and MACD are also actually mimicking that kind of 2002 to 2003 period. If you look, it formed kind of a sine wave S curve all the way to the upper boundary, and then also the MACD crossed the center line into positive territory. So we're getting a lot of the same kind of signals that we saw then. The only major real resistance now is this red volume by price level, which is right at the 141. 50, 142 kind of level. There's a lot of support resistance this level. It happened to be roughly the 2018 high, roughly the 2016 low. It also was the 2010 low on a closing basis, and the 2009 low on a closing basis, and even all the way back to 02 and 03. So this is a very critical level for the Great British Pound. Obviously, breaking out of this formation, if it actually manages to break through, then it kind of pushes off any possibility for any sort of parity in short term. Long term, in the grand scheme, it's still always a possibility, mathematically speaking. But as far as this window that we talked about, it's definitely going to skew that. It's not going to be accurate anymore because it's going to push it off out into the future if, whenever it were to happen. So from there we
Pretty
go to
bearish picture in the dollar you're painting here, bro.
I mean, Dale, you have to report it as you see it. You
Two trend breakouts, long term, everything. So
the only thing that actually is giving any sort of hope to parity is still the pound euro and the euro pound.
yeah,
This pattern is actually, of all the currency pairs, I said this is by far the most important for parity, because in order for it to ever happen mathematically, these are the two furthest apart from the dollar. So these are the ones that have to the pound would have to fall faster than the euro. And if we look, if you look at the stochastics, we're still in kind of a lower, negative territory kind of consolidation here, just as it happened in, again, 03 to 07. We're still stuck in this kind of same period, still hovering around the 50-day moving average, 50 monthly moving average, similar to it was over here, which is the red line. And it's still kind of hovering on this level. No clear 1350 bull cross. So as long as the 13 doesn't cross the 50 bullish, this pattern is still in play. And as long as it is, then in theory, at least that portion of the parity process is still alive. But if
maybe the euro outperforms on the upside for it to come into, continue to narrow.
And so I'm glad you mentioned that. So this is actually, last time was the first time I included the euro pound, because you always ask about it. So yeah, and that's obviously what most people look at more. So I included this time. Last time we discussed, it was actually, we were right here close up to the purple resistance trend line. What happened is we've actually backtracked all the way back to this key orange macro support trend line. Nice. And if we look at the stochastics, these are custom stochastics that are specifically for the euro pound monthly. We see it has a similar pattern again of the 03 to 07 period. So when you're looking back here, you see kind of a long protracted trough, and even around the 50 moving average, when the gap between the 13 and 50 started to narrow, it took almost a full year for that basing process to happen. So for most of 2021, we could be kind of basing in this 864 to kind of 877 level, just chopping back and forth here. And as long as it holds that level, this key orange trend line, then there's potential for finally an upside breakout. This is obviously the full 22-year history of the euro, and the highest all-time high is at 98, which is all the way back in 09. So that would obviously be a potential retest zone. Other than that, this purple line is at the 93 level. So that kind of gives you an idea of the two key upside resistance levels. But you kind of starting to see long-term trends form, and relative to the euro, to the pound, euro has obviously been strengthening over the long term. You see that from this long magenta trend line. And I think part of Brexit is to allow this kind of appreciation of euro versus pound. Ultimately, I think that's this whole Brexit. It was really ultimately allowing even though it's a separate currency, there were a lot of restrictions in place as far as currencies, what you could and couldn't do. So this kind of allows more freedom, I think, for a pound to devalue in order to inflate the currency and kind of restart their economy, because the UK economy has not recovered as quickly as some of the others. So I think it's part of, you kind of seeing a lot of the levers being pulled here and there by different central banks, and this kind of gives you an overarching view. Okay. The next chart is actually one of my favorite ones on the current Forex right now. In late 2019 and early 2020, privately on Charts Coach, I had predicted about a great CAD awakening or a great CAD strengthening, and that was about to happen. And that's when we were kind of in this zone right here, and you could see a 20-year narrowing wedge that was starting to coil real tight. And if you looked at the stochastics and the MACD at the time, they were starting to signal they were going to roll over. And the last time a magenta trend like this failed was all the way back again in 2002, 2003. Well, Canadian dollar is obviously a very resource commodity based currency. It's very sensitive to a lot of commodity fluctuations. And what happened during this period? Why did it appreciate or against the dollar, or why did the US dollar devalue against the CAD so much? Well, this was the last major oil super bull market.
Yeah, 140.
Yeah, this is when it went to 147 was the all-time high. So it went from a base of 35, which is right here around early 03, all the way to 147. And if you look during this period, throughout this protracted oil bull market, the CAD just continued to get bid and bid and bid and bid. I mean, it was merciless. And if you look at this, we're starting to see the same pattern. It broke the 200 moving average on the monthly. We could get a potential dead cat bounce here like it did back in mid 03, which is actually right around May of 03, believe it or not. Okay. And then you see the MACD crossing the center line. You see the stochastics flushing all the way to the bottom and then staying in a long protracted trough, which is kind of what we're actually doing here now. You can see the confluence between all the signs. And it's interesting to note that there also the previous time that oil also hit 100 was in the 2010 to 2014 period. And this horizontal blue line you see right here, well, that's parity. So every time oil reached $100 a barrel or greater, the USD CAD hit parity. Now that from that period, it went from 150 all the way to parity in a 4-year period. I mean, it's a massive appreciation. Well, this time we're starting from roughly a 140, call it 142 high, all the way back to parity. That's a 40% appreciation. And I can't tell you how much I have a lot of Canadian members on Charts Coach, and they're like expressing their frustration because every asset they're trying to touch can't outperform their currency. So, I mean, I feel your pain for all the Canadians that you're trying to find an asset where it's going to be able to actually outperform your own currency, just keeping in dollars. It's going to be tough because
they're real estate.
Yeah, real estate, and also I think, ironically enough, Canadian oil companies, that would be another place you could a place you could hide, because not only are you getting the appreciation on the oil side, but you're at least going to be able to kind of outperform. And at some point, once oil passes 80 a barrel, which it will, I think you're going to have oil tar sands start to pick back up, and that'll be increased demand. Plus, not to mention, you have lumber prices skyrocketing. That obviously puts in additional demand, and there's all kinds of natural resources that are putting upward pressure on the CAD. But it's important to note that every time oil hit over 100, which in the past 20 years, every post-recessionary period that happened. I know it's only a sample size too, but nonetheless, every time that's happened, oil has returned back to over 100 barrel. And during those prior periods, they didn't print $7 trillion. So one would think, given the even higher, more inflationary expectations this time around, that at some point that money will work through the system and we'll get back above there. And then on a side note, you have the Biden kind of green revolution, so to speak. They're kind of initiating all these green policies. Well, ironically enough, the more they try and institute green policies and restrict supply, ironically enough, the more of an upward pressure it puts on oil as well, which would put even more upward pressure on CAD. So it's kind of interesting.
Yeah. Don't you think that it actually works to their advantage to have higher energy prices so that EVs and everything are more competitive? And
ironically enough, it's kind of a convoluted kind
paradox.
of paradox. But ironically enough, oil companies love a green revolution, as do EV manufacturers, as do our alternative energy, because the only way all those alternative energies truly become positive.
You need fossil fuels to do it.
Yeah, you need well, A, you need that, and B, you need them to remain sustainably high. When oil was sustainably above $100 a barrel between 2010 and 2014, that was a fantastic period for alternative energies. It's not until the Saudis had their second price war in 2014, where they just gutted the market, that's when everything kind of unraveled. But I would not be surprised if their official, kind of secret policy in the Biden administration is to intentionally have high. They can never say it openly because they don't want to. Anyone that intentionally raises gas prices is political suicide. But nonetheless, they want high energy, and this is again a manifestation of that continued sustained bull market, and that one lasted almost 4 years on the nose. So, we're in what, year one of that, or year 1.5. So, CAD still has a way to go. So for all the Canadians, cash, to some extent, Canadian real estate, maybe Canadian oil and gas companies, stuff like that is really where you're.
How about Crown Royal?
That's or maple syrup.
I like
syrup.
that. I like the purple sack it comes in.
Yeah, absolutely.
I hide my medical marijuana in there.
Yeah. But anyways, this is interesting how USD CAD kind of is playing out. And it's even during this 2010 to 14 period, you also had a similar MACD cross the center line. And those are the only other 2 times it's happened. So you're getting, I know it's only sample size 2, but anytime something happens 100% of the time, that's a pretty good sign. And then this, I actually haven't done the USD JPY before, but this is Japanese yen. This is a 24-year chart of the Japanese yen. You can see a massive coiling over the past, 20 so years. The coiling actually didn't really start until 2012, but you can see this pattern across the entire chart, and it's kind of hovering around this confluence zone where you're having a mean reversion constantly back to the 200 moving average, but also even the mean of means, so the 50 and the 13 are also converging back towards kind of all in the 109, 108, 109, 110 kind of range. That's a very tight trading range. As of right now, it's kind of in this sort of basing pattern. Ultimately, for a while,
upside breakout.
I'm thinking so, given the yen carry trade. I know for a while it's been a little bit kind of quiet and subdued from an equity standpoint, but as of January of this year, I started to notice that the yen carry trade was starting to wake up again, which is why you have this pop off the magenta.
Do you believe there's a correlation between U.S. dollar yen and rates, interest rates?
So there is an interesting relationship because it used to be one of the largest holders of the U.S. Treasuries was Japanese, the BOJ. And Japanese bond holders, and because they've been at zero bound for eternity, and they're always looking for yield. Anytime our yields rise above, a certain percentage point, roughly around 2%, they again start to pour into their capital flows go from Japan into the U.S., which obviously puts upward pressure on dollar and downward pressure on yen. So, and not to mention during major equity bull markets, which the last yield spike period was between 13 and 14. Well, look what happened. This is the last yield spike period. I mean, USD JPY went vertical.
Right.
Now, this time around, it hasn't been nearly as pronounced, but in theory, it is a tailwind. Because not only do they buying our bonds, but they're buying our equities and so on and so forth, and they just can't get any kind of consistent yield like that they can on our shores. So again, this is kind of, you get to see a lot of the capital flows between Japan and the United States. But for now, I would expect kind of more tight, choppy price action based on where the upper Bollinger is. You're going to be pegged somewhere in this kind of 07 to 11 level, and you're going to be stuck there for a while, at least for the time being.
Okay.
Then we're going to do a crypto analysis. This is the chart I did last time. I remember correctly, last time we were talking about a 5-wave pattern where at that time, this is kind of right around this area, was when we were our last interview. I said we needed more time for this to kind of chop out until we return back to this magenta trend line. It would last a couple of months of chop. The reason I like this chart a lot is it's a textbook example of a distribution top. You can clearly see buyers and sellers duking it out here in this upper kind of 50,000 range. On a closing basis, it never actually closed above 60,000 on a weekly basis. We had a few false breakouts, but you can clearly see once the stochastics kind of finished its hang time in its wave 5, as soon as it broke, the bull market broke down. Interestingly, this in the 48-hour period that it flushed, you had a $12 billion liquidation across 864,000 accounts. So if you do the math, that gives an average price per account of $13,000 and $13,888. So roughly 14,000. So that gives you an idea of the average mean size of the accounts of everyone that got liquidated or stopped out during this. And many of them were kind of small retail traders that were highly levered. Some of them, I've heard even rumors of up to 100 to 1. I don't even know how you trade crypto on 100 to 1 leverage, but I mean, the volatility every 10 minutes alone would wipe you out. But
Yeah.
But it's important to note that distribution tops are very critical. And if you remember all the way back in part 1, I emphasize that as much as crypto may seem like a egalitarian, helping the small guy, little guy out, it's actually a very cornered market. The majority of the coins are in roughly 90 or 100 accounts. And at distribution tops, what you have is the big whales unloading onto smaller, unsuspecting retail. Well, if you look at the proof of what we just calculated, that many accounts, it's an average of $14,000 an account. Most of the people that got hurt are the small guys. They're not the big whales. Most of them probably either held because they didn't need to sell, or they're the ones that were kind of liquidating in this region. So
Or short.
Or that too, yeah. And
Yeah.
interestingly, historically, and I did analysis over the past 13 corrections, the largest drawdown was 93%, and the lowest is roughly 32% if you include anything above 30%. And the actual mean average over those 13 past corrections is roughly 56%. Well, if you look at the peak to trough from, I think it was roughly 65 and change down to this high 29s or high 20,000s, that was actually a 54% drawdown. So even right there alone, you have roughly the mean average of all the previous 13 corrections. Now, do I think it's necessarily over? No, I think this is going to take more time to work through, because obviously even here in the 2017 peak, you had a major drawdown all the way down to the 50, then it kind of dead cat bounced back to back test the 13 in the Bollinger Center, and then it kind of grinded slower, choppy grind lower. You kind of see the same pattern here. It peaks and then it goes down to the 50, bounces, and kind of grinds lower. So I don't think it's going to take nearly as long this time, because ironically enough, when you have this highly levered of a market and this many levered market participants, the flush happens a lot faster, obviously. So I think that, not to mention, in general, when you have more market participants, it just, now they have faster trading. Everything's just kind of more, it happens quicker now than it did, 4 years ago. So naturally, you're going to have the cycle repeat on a faster basis. But nonetheless, this is the last wave 5 peak, and we saw exactly what happened there. Fortunately, everyone on Charts Coach, they got out around the 58 to 62K level. So a lot of them got out in time. But I think what we need to see is, as long as this 50 moving average at 33,500 holds, then you'll have some sort of dead cat balance. But if at any point it were to drop this week below that level, that would be a big red flag, because then the lower Bollinger would roll over. But typically after such an extreme, you're going to have dip buyers step in and pop it up a little bit. But I think this protracted pullback after a 13 moving average Bollinger center line cross, that's going to take time. It's not going to happen overnight. So I wouldn't.
And are you looking for 20,000?
So if you do the analysis, and I'll go through more math when I go through the gold section.
High. Yeah.
But the previous 2017 cycle was 84% drawdown. So if you do purely just on that, I'm not saying it has to repeat 84%, but hypothetically, if we were to do that from the recent peak, it put us at about 10,469 roughly.
Okay.
So that would be now it could be, I don't think it's going to be 93%. 84 might even be tough. Who knows? But if you're to use that as a kind of a basis, that's kind of where we would end up. There is a lot of major support at the 200. If you look at all the prior bottoms, the final flush happened roughly around the 200 exponential moving average. And right now that's at 15,673. So call it 16K. That's probably, I don't know if it'll be able to break below that, but that would be a realistic target, to be honest.
Okay.
And then we'll do a quick bonds update. The last time we were on, the U.S. Treasuries were breaking out of their 13 monthly average. This is the TNX, which is the 10-year.
Right.
And initially, I anticipated it was going to, like prior yield spike cycles, like in 2013 and also in 2017. both of them broke straight out of the 50 and kept rallying rallying further. But this time around, it actually stopped dead in its tracks at the 50 monthly moving average. Well, last time it happened, we have to go all the way back to 09 and 11 when that happened, and it kind of chopped and rejected here a few times before rolling back over. If we actually do reject at the 50 here, which is roughly 1.7%, that actually is a Goldilocks scenario. You know, I think many were automatically assuming 2% was going to come right away. Well, if that's the market expectation and we stall right here at around 1.7, it actually could be a Goldilocks scenario for the medium term, because
pulls back to 130 or 120.
Yes, correct. So the 13 moving average, ironically, is actually right at 1.3, or it's 1.29 roughly. So you have the MACD crossing here, the stochastics ramping. If it's going to happen that way, you're going to see the stochastics peak below 80, which is typically a bearish indicator, and also the MACD rolling over below it gets to the center line, still in negative territory. So if we see some sort of rolling over of these two and you're losing momentum prematurely, then you're going to have another scenario where I think a Goldilocks scenario where if yields don't appreciate too much, then technology can participate, which will help carry the markets. And more importantly, financials actually hit their 2007 pre-financial crisis double top highs, and they finally matched it. And if you notice, financials have been stuck against the brick wall over the past month, even as everyone's talking about yields rising and so on and so forth. It's interesting that XLF also hit 38, which is where it hit pre-financial crisis. So banks basically over a 20-year period have finally returned to where they were back in 1999.
Great point.
Yeah, and that also is interestingly happening to coincide with this 50 moving average brick wall. And as you know, a big part of bank profitability is yields rising. So there's a high confluence and correlation between those two sectors, between the yields and the banking sector. So anytime you want to see kind of confirmation or denial, you need to refer to the banking sector or the NASDAQ Banking Index or XLF, and you'll see they're all hitting that pre-financial crisis double top. So we could actually be peaking prematurely here at 1.7. If we do and roll over to 1.3, that also kind of aligns with gold having this secondary rally, which I predicted would happen once it bounced off its monthly supports, and we're kind of getting this confluence of commodities and so on and so forth. Here is the TLT monthly chart. And this also backs up what we're seeing in that there's the previous bottom in 2018. Then you have one in 13. Then you have one in 11 and one in 9. All of these happened at the 50 monthly moving average, and they all held a double bottom. Well, if that's to repeat again, then realistically, bonds have also bottomed here, at least for this short-term portion of the cycle. Now, can they bottom here and then kind of go through a protracted 2-year cycle like this? I actually think that's probably what's going to happen. I think 17 to 19 is kind of the closest analogous period, which I'm circling right here in the middle of the chart. This is kind of what we expect to see. No extreme move in each direction, but I think we could have a bit of a relief rally here in bonds, which would then coincide with rolling over yields down to roughly a 1.3, maybe even a 1.2. And it's interesting that anytime you see 4 or 5 bottoms over the long term historically, actually there's even one all the way back in 07, so that's whatever 6. And I think there's even more before that. It's obviously a strong sign of support. So I think for now, the call for 2% yields is probably overdone. So I think for now, the expectation is to be more range-bound chop on yields, which will cap financials. It'll provide a window for technology to rally, and so on and so forth. So it impacts industrials and that kind of stuff as well. Cyclicals.
Great analysis.
And then next is gold. This is the monthly chart, the 20-year monthly on gold. I've been comparing it to that period for quite some time now. This is the 2012 period where it peaked. It flushed all the way down to the Bollinger center line. And then it had a 4-month rally all the way back to its previous closing high, roughly. Well, sure enough, that pattern is playing out almost identically. It flushed all the way down to 1690. It actually went all the way down to 1680s. It regained that Bollinger Center at the time, which was 1698. And then it's now rallying even faster than the previous cycle, all the way back to the previous VBP, volume by price level, of roughly 1960. That's a major resistance zone. It's also the previous inter-month highs for multiple months. And on a closing basis, it's roughly around where it is. We could potentially have an overshoot to 2000, but I think, this is where you need to be careful, because if we look at the previous topping cycle, the MACD and the stochastics are forming almost an identical pattern where the MACD rolled over. It then started to narrow again, but then failed to form any sort of bull cross and then rolled over. You're starting to see a similar narrowing here now. And even stochastics during that period, they based at the center line, had a quick dead cat bounce, and then rolled over. And we're already starting to see signs of that kind of dead cat bounce off the center line. So it's important to note these things. Until we have a confirmed rejection at 1960, there's no, it's not official, but once we get to 1960, for those of you that have minors or GLD or gold positions, I would seriously consider at least tightening your trailing stops, because there is a high probability of some sort of reversal there. And this next chart I've actually never shown publicly before, but it's been on Charts Coach for over a year now. But this is actually the 50-year monthly gold chart. I know it's kind of hard to see because this is actually a 4K resolution chart. I mean, it's 4 times the size of the screen, but even if you zoom out, you can kind of start to see a similar pattern. Well, does this same topping pattern also form during the 1970s bull market? Well, sure enough, it does. You have a high plateau on stochastics. Then you have a kind of S sine wave curve, which bottoms at the center line, has a quick dead cat bounce, and then rolls over. And if you look, the MACD also had a similar peak at roughly the same level, albeit not the same magnitude. But same thing happened. And during that bull market, you also had a secondary top, which matched the prior closing high on a closing basis, and then it rolled over. So that puts a high degree of confidence that we could have a similar double top, closing double top at that kind of 1916 level. So that's a real area of interest. I would definitely be careful there. Tighten all your trailing stops, be protective and defensive at that level. But in the short term, up until 1960, I think we still have a solid tailwind. So for now,
what a great presentation.
Thank you. Yeah, I appreciate it. And also, if you look at the RSIs, the red circles at the top, they all also coincide with, major tops. These two were interim tops in the early period, but they don't really match up on the MACD, the stochastics. So I think we're more inclined to be following the peak pattern versus an interim top. And the one thing that would lead me to believe that there could be a potential second move is that we still have not touched that upper trend line, but there's no rule that says we have to. It's just there. We could always consolidate and then hit it next time. So, but I think it is important to note that it is there. But this is where I thought we were going to originally hit that 2237 level. But as we'll show at the end of the presentation, when the gold broke the relationship with the DXY, it kind of put a monkey wrench in that whole one-to-one.
I hate to rush you, but now we have another in-house webinar at 15 after the hour, Alex.
Oh wow!
So yeah, so I don't know how much more.
Okay, I'll try and go through it as quickly as I can. So here's a dollar Bitcoin. This is interesting also in that it's showing a 2 highs and 2 lows. So now we have a descending wedge that could potentially rally all the way back up to roughly a 13% level. So it's important to know that gold at that 13% level is key. Keep that in mind for the end of the presentation. Energy markets. This was, again, I showed this last time. This was the 140-year low. And at that point, it was half of 1%, a barrel of oil versus 1 ounce of gold, or 1/200th of an ounce of gold. Now we're up at 3.5%, but the all-time high in that 02 to 07 period was all the way at 16%. So even from here, even though it's 7 times off the lows, it could still appreciate another 4 times from here in theory if we have some sort of a super oil bull market. So energy markets still have a way to go on a historical basis. On the Dow Jones, U.S. equities, as of right now, there is a major concern because we are entering the wave 5 looks like it's about to end here on equities. We've had a heck of a move off the COVID March lows.
Yeah.
Here are the previous 2 5 waves, bulls. And you see one ended because of taper tension, one ended because of COVID. Obviously, I'm not saying a repeat of this is going to happen. It's not. That was a global pandemic. But could we have some sort of a, black swan or an event here in June or early July? I think it's looking like we're going to have some sort of exogenous factor here kind of kick in here soon, because every time this, no, it's going to be an unknown. It'll be something we can't predict, but some outside force is going to act on the markets here soon, it looks like. And so
UFO?
Possibly.
All right.
But anyways, how was I able to predict 35,000? Well, if we go back to the previous chart I'd shown, I showed that roughly 10 trillion of cash, and you had 50 trillion in financial market cap. It targeted roughly 35,000. That's how I was able to predict that level. You obviously can see that came true even quicker than anticipated. So how do we combine all this together? This is the DXY gold relationship chart, and you can see during this period, the gold official.
Just lost you. And I'm going to have to wrap you here anyway, Alex. Are you there? Maybe it's me. Can you guys hear me?
No, I can still hear you, Dale. And,
all right. Well, we lost Alex. I have to wrap it. For you guys.
We got to start the morning edge or morning edge anyway. So.
All right. So, I'll get a hold of Alex. Blake, why don't you shut this down so you guys could get going, and I'll contact Alex. It was a great interview. He held the audience, and we could bring him back. So,
all right. Thanks, guys.
Alex, I see you back, but we have to end it here. I'll get a hold of you. And go ahead, Blake. Alex, I'll get a hold of you.
I can't shut it down. Somebody else is going to have to.
Maybe is Steve here? Because